What's up, YouTube? It's Joe Catchpollia sitting on the couch, making some money investing in fractional real estate online as usual. Today, I'm just going to talk about some of the updates that Arrived Homes put out in their webinar they did today. If you didn't catch that, it was a relatively long webinar, and so they covered a lot of ground. But I'm going to try to hit some of the highlights, some of the things that seemed important to me. Um, some stuff I think was a little bit promising. They talked about their new city funds. They talked a lot about the Seattle City Fund, which is the first city fund they're launching. Talked a little bit about the updates coming as far as the secondary market trading, which I think is going to be when I finally jump onto the platform. If you haven't been watching any of my other videos, I haven't invested on Arrived yet. I don't find their individual deals to be very compelling. I'm always just looking at all of my options in fractional real estate investing. And when I look at the actual deals that they put forth, they're just never projecting a very good yield. As far as in my mind, right? When I compare it to the returns I'm making on Lofty or Mogul at the moment, or even Ground Floor, it's hard for me to understand why I'd want to buy some of the deals that they put out. Um, and I'm not sure that this Seattle City Fund is really going to be any different than that for me, but there's some things that I think make it somewhat interesting, and so I'm going to get into that. Before I do, please like and subscribe. Also, in the description to this video, I've got links to all the fractional real estate sites where I'm currently invested. Just because I invest in them doesn't mean that you should. You should do your own due diligence on every single platform and on every individual property. And then I also have a link to our Discord that I've set up. So if you want to jump in there and talk to a whole bunch of other investors that are all focused on fractional real estate, we're in there every day. We've passed 70 members now, and it's growing daily. But so yeah, we want to check that out, join the conversation, please do. That's really my goal of the channel is to, look at all the different options that we have out there as far as fractional real estate investing. Meet many of you, lots of people I've talked to, done video calls with, DMs, just talked through the Discord, all different spots, maybe just messaged, commented on the videos. Any of that's fine. But just trying to, share some ideas, thoughts on, uh, where we can find opportunities in this space because it's new and it's growing, and there's different stuff coming out all the time. But so their city fund, it's brand new. They have two properties under contract, and I'm going to go into what those two properties are in a little bit of detail, but not too much. Um, and so in general, I avoid the private REITs and I avoid the funds, because I want to be able to do due diligence on the individual properties that I'm investing in. And that's what really attracted to fractional real estate investing. Now, in this fund, they're actually telling us what these first two properties are. And so it seems like they might be transparent as to what all of the properties are. And so maybe we can actually do due diligence into the whole fund. Um, whether or not that means, that doesn't solve the problem that I usually have with funds because if I'm invested in here and they go and buy one that I don't like, well, my only real option is to just get out of the fund, right? I can't say yes to some and no to others like we can when we're just looking at the fractional stuff in general. But I'm going to get into the details a little bit on those properties. But one of the things, so they're doing a couple of things. They said it's a an open-ended fund, meaning people can just continue to put new investments in if they've bought, if they need more capital in an area to execute a certain plan. I'll get into that a little bit. They can raise more funds in the future. And one of the things that they said that I thought was really interesting. So they're very focused on outsized appreciation versus any type of decent yield. I mean, if when I show you the yields on these, I mean, in my mind, it is just a very sad, like low yield, and I don't understand why they're the markets that they're going for to a certain extent, but they're very focused on appreciation, and so basically they one of them mentioned it gives them the ability to hold properties until they finally get to the appreciation. If it takes longer or if it's shorter, they're going to get there. But a couple of things I think are interesting about these city funds that they're doing is they're going to try to do it in several different markets, and so you can pick markets that if you're more interested in certain markets than others, you can get exposure that way. I think it's one of the things that I thought might be interesting for me is, I'm buying all individual deals right now, pieces of individual deals. But I'm in a lot of markets, but not in all the ones I'd like to be. And so as they come out with more, if I haven't, if like Mogul's not putting out deals or Lofty's not putting out deals, that any of the other platforms aren't putting deals out in some of these markets that I'd like some exposure to, it might be a way to round that portfolio out a little bit. I still don't love the idea of the fund, but some of the stuff that they talked about made me think it's a better alternative or at least it will be for some people, than buying individual properties on their platform. And so, other than just like you get to say, hey, I like this this market or I don't, they're developing specific strategies for each city. And so, like a long portion of the call today was devoted to, well, what's the strategy that's going on here? Um, they basically were talking about where the density is and where they're targeting areas that are less dense, because there's this ADU legislation that's happened in Washington State, that basically allows them. And if you don't know what an ADU is, it's an accessory dwelling unit. I actually just found, so like if you have your main house, basically now there's this rule that you get to make, depending on the size of your lot and or whatever, you get to make either, one or more of these smaller homes, and they can be attached, or they might be attached, or they might be detached, right? But the rules now give you the ability to create these extra units on properties that are zoned as single family. And so, I think they're looking at that as being a real opportunity to buy these. What they're basically doing here is they're targeting homes on larger lots. Maybe in the future they can cut some of that land off and sell it, or subdivide it and sell it, or maybe they can build an ADU and create additional rent and also additional value. Um, I thought it's interesting. It is and they obviously went into this in much more detail. Hopefully that I looked for the link and I didn't find it yet, but once it's out there, I'll post it um, in the description to this video. So if you want to watch the whole thing, you can. A couple of things struck me. One, I think that so a couple of different people from their team uh, were talking today. This guy, Cameron Wu, struck me as being just super knowledgeable about. It was actually kind of funny because he seemed super knowledgeable about that market. Talked in great detail about this strategy. Um, I felt like it gave me a lot of confidence in, okay, this is the person that's making these decisions. He's like the VP of investments at Arrived. So I thought very, I think he had a very, I was very impressed with him in his presentation and his knowledge about the market and the strategies and what they're planning to do. Um, and then but then when I looked at the specific properties, the yields were just so low. It just made me wonder, like, I can't figure out how you can know so much about real estate investing, but then still be happy with those types of deals. I don't know, and I think part of it is, they have, I don't know if their headquarters is in Washington, but they have a large, their team has a large presence there. And so sometimes when you've just been in a market for a long time and you've learned to make money in that market, it's not always immediately apparent that, like, you can just, it's just so, going to other markets, it's just like playing on easy mode if you can get like significantly better yields with certain strategies. But anyway, I really like the strategy that they have, and I think that that can't really be what it is, because they mentioned they're in like 60 different markets already, or 60 different cities. They're not, obviously not with these city funds, but with individual properties. They said I think somewhere around 60 cities already. Um, but I thought it was really interesting because, they will pick in each area, they'll try to, craft a strategy like this. And I think for, if you're going to invest in single family homes in Washington, it's probably one of the best strategies I could come up with, right? Like, I mean, a really interesting value add. There, it makes it so you can buy properties in more attractive areas. When we look at the individual properties, it's, they're older neighborhoods, older homes on bigger lots. Um, which makes them a lot different from a lot of the other homes that usually there's been a tendency for them to put like brand new construction or close to new construction out. But so I think that makes a lot of sense that they're, um, crafting new strategies in each market. And so as each city fund comes out, it'll be interesting to see how much that strategy changes. If it is, what other ideas that they have that might really work. Whether it's, I don't know, they talked a little bit about STRs, but uh, not sure what their. I think they don't even know what their next city is going to be yet. I'm not sure that's true. They asked like, hey, where would you like to see it? Somebody they had mentioned Las Vegas, but I don't know that they actually have one in the works there. Um, but I think every market is going to be different in what you buy in each market. You should, if you're executing the same exact strategy in every market, you're definitely not, you're definitely leaving money on the table. So I thought that was pretty interesting that they're doing that. Um, they let's see. They talked about, obviously that strategy takes a lot more flexibility, right? And so I understand why they're wanting to do this in the funds instead of doing it with individual properties. Because when they've all the ones that they've done the individual properties, they do raise a reserve, and but if they had to have the funds sitting there to someday build a ADU maybe on a property, you couldn't do that with the individual investments. But with a fund, they have that flexibility. And one of the things they talked about too is investing in mortgages or other types of credit, real estate related credit, while as a way to manage their cash, right? So if they raise a bunch of money in the fund, but they haven't bought a bunch of properties yet, they might invest in mortgages, sort of like how they have that debt fund already. And so, and they said if they did that, it would be, in that market. At one point, they said, I think they wouldn't be more than 50% of the fund. Um, but really, they seem to stress like, it's just a way for us to manage our cash, right? It's not a big part of the strategy, but while we have money in the fund, uh, it's, we need to do something with it, put it to work. And so like short term, like fix and flip loans, make a lot of sense, I think. And then it makes it so they can get a yield while holding that cash to either opportunistically buy additional properties, or, okay, now the market's hit a certain point, it makes sense to add that ADU or whatever whatever it is. So it gives them the ability to be a little bit more nimble than when they're just, picking the individual properties and putting them up. So I can see that. I think it is an advantage. Um, it's not an advantage I'm really particularly interested in, because again, I don't want to, I like to pick the individual properties. I like to do my due diligence on every single property. And then, so, all of this sounded really good. And then, they actually talked about the properties themselves, and it's really hard for me to get it. Okay, so I'm gonna show you each of them. So this first one, let's see. I don't even know how you say that, but let's see, which one is that? That is, nope, it's this one. And so you can see, they are large lots. And so if you're going to do an ADU, I think it makes sense. I don't know that this is one that you could subdivide or not. Probably my guess would be not, just because of the shape of the lot and where the home is. It doesn't seem like it would make a lot of sense for that. But it does seem like, okay, there's a very big backyard if you wanted to put another dwelling unit on there. It makes perfect sense that this is one that fits their strategy. But if you look at the home itself, it's a significantly older home than what the neighborhoods in the home itself, and the homes themselves, are definitely older than what they're typically getting. And so they did talk a little bit about, the capex that they need and whatnot, and planning to, like, one of them, they talk, if we had to replace the roof on them, or whatever it is, but that they have pooled resources to handle that when it's in a fund, versus, if you're buying the individual property and you forget your reserve, you've got to, you end up having this money that's sitting there that's not like necessarily being put to good use, because it's just waiting for whatever it's needed for. Um, but so one of the things, both of these properties show up as pending. This one was listed at 849, and they're buying it at 850. And so both of them are listed on the market too. So they're not executing like an off-market strategy. One of the reasons I think Mogul finds a lot of great deals is because they are, uh, I don't even know exactly how they're doing it, but they're finding a lot of deals that aren't currently listed. I think you can do perfectly fine buying deals on the market. I mean, my team here in San Antonio helps people. We work with investors full time and help them buy properties here and do it, all day, every day, finding deals on the MLS that are good investment deals because that's what we do. But it takes a lot more. You have to be very discerning. And I think that's kind of what they're doing here, right? Like they have a specific plan. They're not just going to go and buy any property, which, like, if you look at what they're putting out as individual properties, sometimes it really just looks like they're buying any random property and and listing it on there. So here at least they have a something specific in mind, picked an area for a certain reason, um, but they're not getting like particularly good deals, right? So this property, and this is what I think actually makes it more interesting to me, is they're not just they pick this property because they can see this additional value that they can add to it, which is, in my mind, that's, if you're going to be someone who purchases properties on the market, that's the way you have to be finding good deals, right? It's not that you found a deal that nobody else found, it's that you could see something in that deal that nobody else saw, right? And so, you're able to put a little bit of potential. But so this one, it looks like, they're saying purchase price 850. And so it looks like they're paying full price for it. How long was this one on the market? 40 days on Realtor. So I don't know what's, maybe they got some credits or something. We don't have the full details, but I thought that was kind of surprising. The next one though, it does, it's listed at 825, and they've got it saying purchase price is 830. So I don't know if these are just sort of, round numbers that they're putting there, or, maybe was this one was all, wait, were these both on for 40 days? That's kind of weird. That's kind of strange that they were both on the same, they both were listed the same day. Um, is that not what this number is? Let's look at just some other property on here. No, if I'm wrong about that, maybe I am. Usually on Zillow it says days on market, but I mean, this is what this looks like to me. It just strikes me as odd that they're both exactly the same. But this one is sort of the same idea, right? It's just a older neighborhood where you have, a lot more land for the homes than what how things are being built today. And so it's just executing on that strategy that they're talking about. And I would expect to see a lot of properties like this in this fund. Um, One of the things, is this it? Let's look back at here. Nope, that's not it. Am I facing the wrong direction? Huh. Thought that maybe it's this home behind here. Let's look again. Yeah, I think that's it. I think that's the one. Oh, we got the garage, and then we got, yep, the brick there. Yeah, I'm pretty sure that's the one we're looking at. I guess they're standing on the other side of the tree. I keep looking on the wrong. They're standing on the other side of that tree, maybe. Um, so I would guess this property got flipped, and then they're buying it because it looks pretty well. Or that's, how old is that? I always get fooled by that. I forget to look at. Oh no, that's a really old image capture. Wow, that's really old. I wonder why they don't have a newer one than that. So who knows? I mean, it could have been quite a while ago that that was done, but obviously it looks like it's in much better condition now. Whether it was a flip or it was a homeowner that bought it, renovated, lived there, I don't know. But I really just pulled these up because I wanted to see, one, were these off-market deals or were they listed? Both of them were listed. And does it look like they're like negotiating significant discounts because they're cash buyers? And no, it does not. Um, like I said, maybe these are just round numbers and it's going to turn out they got a little bit better deal. But the thing that when I looked at these really just blew me away is their anticipated rents. So This is why, I say like their yields in general, like they're always the price, one, there's a lot of expense in their regular model, right? Like for every home because uh their securities and they're spending the money to do that, plus their fees. So, it's really hard to overcome those expenses on their individual properties, but they're also like just often buying homes at like the rent to price ratio is just much different from what I would expect to want to get a good deal. So, like, for example, if I were going to buy a property like this here in San Antonio, like I'd want at the worst case, I'd want to get a point 0.7 rent to price ratio, right? And so if you're like at 850,000, 0.007, you're talking about almost $6,000 in rent. Um, and here, they're getting 3,000. And, the same thing. I mean, you've got similar, this one is even slightly worse, right? So what are they actually doing? So if you're 850 divided by 3095, oh, I do my 1 over x when I screw that up. Yeah, I mean, this is just so low. And so like if you multiply that by 12, that is if you just bought the home all cash and you collected the rent and you had zero expenses, this would be the dividend they could pay. Well, you have property taxes, you have insurance, you have repairs and maintenance. And so, um, when you add all of those things up, like these are going to be, uh, I wouldn't expect there to be much cash at all thrown off by these, if any. I mean, I don't, and so this is very much just an appreciation play. Um, and that's why I have a hard time with the strategy overall. Like, I don't mind, okay, we're trying to make, get some outsized appreciation. They talked about, well, our 20-year average appreciation is 4.7%. That's great. But like, what if I were in a market where I could get double my rental yield and then, okay, my appreciation rate's just a little bit lower, right? I mean, I don't, and this 4 point, when we just look at the last 20 years, I think it's really scary to do that as well. Like, because the last 20 years in our business have not been, they've been very special historically, right? We had, well, first of all, at least it does, they went far enough back that they are picking up the 2008 crash in there. But then, like, we had the best 15 years run, maybe 15 plus year run that, it was amazing, right? Like, I mean, we just had incredible appreciation. And so, um, to just look at the last 20 years and say, okay, going forward, we're going to have something that looks like that, I think is tough. So I don't know. I mean, for me, that type of strategy where we're really looking at, where our rent is barely covering, it's going to cover your expenses, but well, let's look at what the property taxes are here. They probably have, um, so yeah, $400 a month in property taxes, another, so 650. Um, you've got your management fees, you have, repairs and maintenance. And so then you really start to talk about like, okay, maybe we have, eh, let's say you have $2,000 a month to really, after all that. And this is just, again, guerrilla math, right? Like I wouldn't count on this math to figure out, what your yield is going to be, but 2,000 times 12, and then divide that by, uh, I was looking at the wrong one, but 850. They're both pretty similar. Yeah, I mean, so maybe you get like a 2% cash on cash. When you buy it all cash, you can't put debt on this because your debt would be, your rate today would just be unbelievably higher. And so they did talk a little bit about rent growth too. And so, sometimes like San Antonio is a market where a lot of people will buy here and be close to break even because they expect both rent growth and appreciation over time. But that's close to break even like once you have your debt on there, right? Like not, I mean, this is like, it's such a low number. um I don't know, it's really hard for me to understand why that is. why that's a strategy that anybody's really excited about. But it is really just we think we're going to get outsized returns on appreciation. So, okay, 4.7 is the market level appreciation. Plus, we're going to execute these strategies, right? This is what they're saying. We're going to execute these strategies, add ADUs, maybe subdivide land in some instances, do different things that we're creating some additional value. And I think that is, you can certainly do that and get very good returns. And I mean, that's, oftentimes properties that I've bought, like when it's land, vacant land or different things, the strategy isn't always just what's my cash on cash return, but it's hard for me to want to invest in a fund of these when I don't have any examples of ones that they've done before. And I don't have any reasonable way of predicting what those deals are going to look like going forward. I mean, I'm sure they have some sense of what they're going to do, but it is, uh, there's no way for me to do a proper due diligence and feel at all comfortable about what my return is going to look like. It's really, do I think these guys know what they're doing? What do is it? I mean, it's just really, yeah. I mean, it's basically gambling. It's as far as the way I think of investing, right? It is not. And you want to look at their full offering circular and financial reports. I don't want to have a 2-hour video today. So that's really all I wanted to say about their city funds. The other things that they talked about, somebody had asked about, well, can I 1031 into your city funds? And they said no, and they were explaining why. Somebody was asking about can it be set up as an uprate? And I think the answer to that was no as well. And again, it's so you could do that. Uh, but then the other thing they were talking about, oh, and what I'm most excited about on their platform is their secondary market trading. So they have somewhere around 500 properties that they've already sold as individual properties. And so what they're talking about doing is making it, and so people are trapped in these investments, right? Like people bought them when they were first purchased. They have a set holding period. I think they say like a 5 to 7 year holding period is what's expected. Um, let's see, where do they put that? But other than that, there's been no way to cash out. And so what they're trying to do is say, okay, yeah, this was calculated and assumes a 7 year holding period, but there's been no way for people that bought these a couple years ago to cash out. So what they're going to do is create a market, sort of like how Lofty has, where you can just go and buy the tokens from somebody else. But the problem, well, what they're doing differently though, is they're only going to open up trading for 1 week each quarter. This strikes me as very odd. I'm not sure why they're doing that, but they mentioned, so this was brought up months ago. I saw an article about it, but they said that they were waiting for some sort of regulatory approval, and it sounds like that happened now. And so once that happened, then they actually built out the functionality, and what they said is they've been testing it, and they're going to do some more internal testing to make sure the transactions work and everything. And so it sounds like, sometime in the next maybe 2 months, that's going to happen. There's going to be a separate webinar whenever they're ready to do that and to announce that. So, I'm still going to look out for that. But this is where I think that there's going to be some opportunity because I'm I'm hopeful that the way they set it up allows for us to go in there and, provide liquidity for people that are trying to get out and hopefully get a decent discount for that because they should be pretty thin markets. And especially on ones that maybe are not the best performing ones, I'm hoping to execute something that looks like the discounted token strategy that I'm using on Lofty. Now, minus the sell in the real world portion, right? Like it just has to be okay. Am I getting a big enough discount that holding it that it boosts the yield and I'm getting, additional appreciation when it sells because, or additional, delta between what I bought it for and what it sells for because of that discount. Um, so whenever they actually announce that, I'm going to be, I got all pumped about this the first time because it's 500 properties somewhere around there that are already out there that are operating, that some people have been trapped in some of these for 3 or 4 years now. And I think the ones that are older actually probably did really well. But the ones that are just a couple years old, my guess is there'll be some unhappy people, and that'll want to get out. I mean, I know some already, uh, and so I don't know. But unfortunately, that's really all they had to say about that. You know that they had gotten approval, they built it out, they're testing it, and it should be coming up in sometime in the next couple of months. They mentioned the summer, but then like to me, like we're pretty close to the summer already, right? So we'll see, but hopefully that does happen. And then they said it would be like a week of trading, and so I'm not sure if that's like to keep things easier for them operationally, right? Because if they don't have the platform up all the time, or if it's because like, okay, like one of the things that they do, I should have left this open, is they put out, in this performance thing, uh, let's see, you get these like updates on it. The initial offering, well, this is not an old enough one, but if you look at some of the older ones, you'll have like updates over time. And so my guess is they want to put out an update and then okay for the next week people can trade. Now you have the most up to date information while you're trading. You're never in a spot where um, we're trading on 2 month old data, but they don't want to in that way they don't have to put out info all the time. I think it's an interesting solution. It keeps them from having to just have constant transparency. If you've watched any of my videos about trading on Lofty, that's what I'm always pushing for because you can trade all day, every day. I want all the property managers and co-owners to give us full transparency as close to real time as practicable, right? And so as practical. Um, so I want, but here they're not going to do that, right? They only put out their info at certain periods of time because they are securities. And so because of that, and because they have so many different ones, and I think that's why they're limiting it to short periods of time. I'm not even 100% sure that's why, but that's really my speculation. Um, I'm very much hoping when that happens that I can pick up some deals in here because if you're following this space at all, Arrived is the one company that like most people have heard of Arrived Homes. At least people like if you're in the real estate industry or you're sort of a little bit interested in investing in real estate, you've probably heard of this platform more so than any of the others that I talk about. Um, but at the same time, and they, 500 properties is significantly more than the next biggest platform that I'm invested on, except for, ground floor goes through a bunch of properties, but they're all as mortgages, so it's a little bit different. So having access to so many more potential deals would be fantastic. But I just, I never am excited about the ones that they put out. And I'm just going to look at this one real quick and show you what I'm talking about here, right? So when we look at the financials, and I'm not saying like this isn't even with me doing any due diligence, like I just look at what they say and decide like is this an exciting, their annualized total return on this one, 6.2%. I mean, I'm getting, on a lot of the properties I'm buying on Mogul, the yield is double this, right? Not the total return, but the yields, like the actual cash on cash return is double that. So it's taking and this is made up, partially in cash flow and partially in their expected appreciation. So if you look at if what they're telling you is this deal is only a 6.2%, and that's without me digging into it and deciding like, maybe it's actually a little bit worse than that, or and it's also possible that it's a little bit better. Um, but even still, like, it's not double. So it is just really hard for me to understand. Um, I think that it is one of the smoothest platforms. It's very easy. It is like I think they are focused on like the ease of the transaction. They push a lot that their safety. They've got big backers that that sort of thing. So I guess I kind of understand the mindset of some of the people who invest on there. But for me to as a real estate investor, I've always looked for you know significantly better returns than what they're projecting here. And it's not even that difficult over any long period of time to do better than that, as you know, if you're buying whole properties. And so, they're basically saying, hey, we've made this easier for you, so you should just take a lesser return than if you just went and invested in real estate on your own. And and I think to a certain extent you're going to have to do that, um, if you're just buying any random properties, which is kind of what it looks like they do. So I don't know. I don't mean to be too critical. I think that they are, I think that there's a reason a ton of people are still investing with them. Um, but I'd like to see, if the secondary trading does create some opportunities to buy into some of these at a discount, I'll be all very excited about it. Otherwise, I think I'm probably just going to continue to not be an investor on here and just to wait for, you know, ma maybe they get their short-term rental business to really start working better again. Maybe they pick up on the pad split model, so they can give some better yields like some of the other platforms. I mean, I'm just not sure. I don't know. But that's really all I have to say about it. I don't think I said tickle the like button, so please give it a little tickle. I think that's what I'm supposed to say now. And I think that's everything. I already said make sure again, just because I don't like these deals, do your own due diligence, right? Like maybe, so one of the things is maybe you think this platform is just safer because it is, they are issuing actual securities and, because you like the backing of them, or, they're a little bit more established, right? Like maybe that safety is worth it to you to give up a big return. It's just not for me, right? And so, just because it's right or wrong for me doesn't mean it's the same for you. So please do your own due diligence on that. If you are somebody who likes to invest on here, I'd love to hear about it. Like what's got you putting money on here versus somewhere where you are going to get a better return. Um, is there something I'm missing? Do you think you're going to do significantly better on some of these? I think the people that bought the first wave of these properties probably will, because it was prior, to 2022 peak, right? So I don't know when their first ones came out, but I think they were around 2020, maybe somewhere in there. So you might have some that had some significant appreciation, and in some markets maybe some decent rent growth, right? And so I don't know, but I am curious, if you're invested on here already, how's your portfolio? Are you happy with the returns that you got? And what is it that attracted you to this one? Because I keep going back to it and I just can't pull the trigger on anything. I just haven't seen anything that I'm excited about. I think that's really it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to. That made a whole lot more sense to say the mistakes thing when I was building a container home. But my son, he's 11, but I still listen to him about YouTube, and he says I should have an outro. And so that's all I got so far. If you think of a better one for me, put it in the comments because, obviously I don't mind having something different. All right. Thank you.